I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you. Hey guys, welcome back to another GW Answers series video. Today we have a question from Frank Molarsik. And he wants to know the biggest lesson learned about the stock market in general, maybe something that covers ETFs, stocks, options, etc. So this one, it kind of goes back to my weekend video where I said I almost quit. By the way, Frank Molarsik, if any of you guys are interested in stock analysis, Frank Molarsik has a YouTube channel. Go check him out. I'm going to leave the link down below. He really does some quality analysis on some big companies, big stocks, your major stocks that you really would want to invest in. He deserves a lot more subs than he currently has with the quality of information that he puts out. So if you're a individual stock, nerd, I don't know, sorry, I didn't mean to put it that way. But if you're an individual stock kind of a individual and you like the analysis and all that stuff, check out Frank Molarsik. He does really good stuff. He also does some weird tech stuff that I have no clue what is going on. So if you're in IT or something or coding, I don't know. Don't ask me, but he does some of that stuff too. So like I said, I'll leave the link down below. Go check him out. But his question is the biggest lesson learned about the stock market in general. And I got to, harken back to my last video where I said I almost quit. And that biggest lesson was chasing yield. Chasing yield. That one really bites, right? Because I think that's with anybody starting out in especially dividend investing. You think, well, if 3% is good, 10 must be great, right? And it would be great if all things were equal, yeah. But normally, those high yields come at a price, and it's usually, yields a lot of times are connected to the stock price. So if the stock price has gone down, the yield shoots up. So you have to really look at that and see why that company is paying such a high yield. There are some sectors that do, typically pay a little bit more, like energy and REITs and things of that nature. So you really have to really pay attention to the yield in, just buying high yield stocks just because they're paying high yield is a huge mistake. You really need to research the company, figure out, why they're paying that yield. Can they afford to pay that yield? Because a lot of times, if they're up there paying, 9, 10, 11, 12% and up, and something happens in the market, like, for instance, a March 2020 or, anything like that, the first thing that's going to go usually is that dividend. And if that dividend gets cut, so will the stock price. So not only will you lose out on the dividend, you'll lose on the stock price as well. Because once the dividend gets cut, people just, they exit the exit stage left a lot of times. So that covers stocks. Options, it kind of falls in line with high yield, and that's don't chase premium. I chased premium a lot when I first started back in December. I touched on that as well, where I made a lot of money, and that's kind of the danger of options, is you can just get in there and start clicking buttons and make money without a thought in the world. And but the way options work, you need to know the volatility of how options work, and it can come back and bite you. So don't chase premium. A lot of times, just like high yield, when premiums are high, there's a reason for it. right? There's a reason for it. There's, it's a risky company. There's earnings coming up. Um, there's a FDA approval coming up for a drug company, stuff like that. So that's it with options. And then ETFs. Lessons learned on ETFs. I've learned that ETFs, for the vast majority of investors out there, is the way to go. I used to be an individual stock picker. I chased yield. I did a little bit of research into individual stocks like Frank Malarsic does. But I've found that for the time invested, I'd rather just own an ETF. That's how I became the GW ETF channel, right? I was into this high yield stuff, picking stocks and all that, and I wasn't good at it. So if you're not good at it, buy an ETF by all means, right? There's ETFs to fit everything and everything you want to do. Every sector, if you can think of it, there's probably an ETF out there. That doesn't mean they're all good, but at least with an ETF, you get a basket of stocks, and you're going to follow that basket performance-wise. I would say, of course, read prospectus on the ETFs and all that good stuff, right? But I think for the vast majority of investors out there, ETFs are the way to go. Individual stocks next, and then options. Options, of course, is more advanced, but if I can learn it, you can learn it. And I would say, if you've got time, it's best to learn, right? Just take it slow, learn about it. So that's it. This is a quick one. Biggest lesson learned about stock market in general. Number 1, don't chase high yield. Number 2, don't chase premium. And number 3, for the vast majority of people, including myself, ETFs are the way to go. Hope you guys enjoyed. Leave me another comments and questions, whatever, down below. I'll probably make a video on it. You guys have a great day. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.